Brad Garlinghouse just said something that the community needs to hear in its full context. Not a price prediction, not a hype statement, a specific, documented, commercially significant statement about the trajectory of Ripple's business. That, when connected to what happened this week with the Federal Reserve, with Kraken, and with the Clarity Act's confirmed markup for next week, describes a picture that is more concretely bullish for XRP than anything that has been assembled in public for this asset. Garlinghouse appeared on the Crypto in America podcast this week and said the current bond settlement system is slow, arcane, and broken. He said it is only a matter of time before it all moves on chain, and the XRP ledger is built for exactly that. He said 30% of Ripple Treasury's $13 trillion payment volume could be on chain by 2031. And he called the weeks of May 11th and May 18th the decisive weeks for advancing federal crypto legislation at Consensus Miami, warning that if momentum stalls in the Senate Banking Committee, the probability of passing a comprehensive crypto bill could decline sharply. Those statements from the CEO of the company that has been quietly assembling the most comprehensive institutional payment infrastructure in the history of digital assets need to be understood in the context of what happened at the Federal Reserve this week. Kraken Financial received approval from the Federal Reserve Bank of Kansas City for a limited-purpose master account, the first crypto company in the history of the United States to receive direct Federal Reserve access. Ripple applied for its own Federal Reserve master account in July 2025 through Standard Custody, the New York-based trust and custody firm it acquired. Garlinghouse called it a massive step forward, and the Fed's governor, Chris Waller, announced the Skinny Master Account framework that would allow legally recognized fintechs and blockchain companies to connect directly to the Fed's payment rails for the first time. The Fed is opening up, Kraken went first, Ripple is next in line. Today, I'm going to walk through exactly what these developments mean for XRP, what the Federal Reserve Master Account actually does if approved, what Garlinghouse's 30% on-chain statement means for XRP settlement volume arithmetic, how the war's Fed transition changes the probability of approval, and what the Clarity Act's confirmed markup for next week means when all of these pieces are assembled correctly. Before I continue, this is not financial advice. I'm sharing publicly available information for educational purposes only. Always do your own research and consult a qualified financial professional before making any investment decisions. Let me start with the Federal Reserve Master Account development because this is the piece that most XRP community coverage has been getting wrong in terms of its significance. A Federal Reserve Master Account is not a consumer bank account. It is the specific type of account that gives a financial institution direct access to the Federal Reserve's payment system infrastructure. FedWire, FedACH, FedNow. Institutions with master accounts can settle transactions directly on the Federal Reserve's rails without going through an intermediary bank. They can hold dollar reserves directly at the central bank, eliminating commercial bank counterparty risk, and they participate in the US payment infrastructure as a first-tier institution rather than as a client of a first-tier institution. Until this week, no crypto-focused company in US history had ever received a Federal Reserve master account. Kraken Financial changed that. The Federal Reserve Bank of Kansas City approved Kraken's limited-purpose master account, making Kraken the first crypto firm in history to receive direct Fed access. The account operates on an initial one-year term, with services rolling out in phases. Kraken won't earn interest on reserves and won't have access to emergency lending facilities, but it will have access to the core payment rails, the same FedWire and FedNow infrastructure that commercial banks use for domestic transfers. Paul Barron, the journalist and analyst, argued in a documented post following Kraken's approval that Ripple is next in line. His specific argument was that Ripple's National Trust Bank charter granted conditional approval by the OCC in December 2025, was the setup, and that direct Fed access is the final piece for RLYSD to settle at bank scale. He wrote that the Clarity Act's momentum is forcing the Fed's hand. The honest limitation is documented and important. Kraken applied for its master account in 2020. Ripple applied in July 2025. If Ripple's application follows the timeline as Kraken's, the approval could take until 2030. That is Alexander Wilkerson's documented criticism, and it is a legitimate one. The timeline for Ripple's master account approval is genuinely uncertain. But the Wash-Fed transition, which happened on May 15th, changes the institutional environment for Ripple's application in a documented way. Kevin Wash's published philosophy on payment system modernization is aligned with exactly the type of fintech blockchain integration that Ripple's master account application represents. The Wash-Fed supervisory staff operate in an environment that is more receptive to the skinny master account framework than the Powell Fed's environment was. Governor Chris Waller's skinny master account framework, announced at the Fed's Payments Innovation Conference, is the specific mechanism that could accelerate Ripple's timeline significantly. Unlike a full master account, the skinny version would not grant privileges like borrowing from the Fed or earning interest on reserves, but it would provide critical payment capabilities, the same rails commercial banks use for domestic transfers. This would allow legally recognized entities like Ripple to plug RLUSD and XRP liquidity directly into US payment networks, reducing reliance on intermediaries. For Ripple's application, the skinny framework is a lower approval bar than the full master account, which means the timeline from conditional OCC approval to skinny master account access could be significantly shorter than Kraken's 5-year full application timeline. Now let me walk through what the master account approval would actually mean for XRP specifically, because this is where the regulatory development connects directly to the price thesis. If Ripple secures a Federal Reserve master account through its OCC-approved trust bank, RLUSD's dollar reserves would be held directly at the US Central Bank. That removes commercial bank counterparty risk from RLUSD entirely. The RLUSD that is currently backed by Treasury securities, held through intermediary banks, would instead be backed by reserves held directly at the Federal Reserve. That is the most secure possible backing for a stablecoin that any stablecoin issuer in the world has ever achieved. Not matching government securities at a commercial bank, actual Federal Reserve reserves. For XRP specifically, the master account changes the capital treatment that the banks deploying Ripple's ODL currently face. When Ripple's infrastructure operates outside the supervised payment framework, banks holding XRP for ODL operations must set aside capital against the regulatory uncertainty that unsupervised settlement creates. When Ripple's trust bank has a Federal Reserve master account and the infrastructure operates within the supervised payment framework, the capital treatment changes categorically. The capital that banks maintain against unsupervised settlement risk in their ODL operations is eligible for reduction. That capital release is the commercial incentive that makes ODL deployment compelling, not just for efficiency reasons, but for balance sheet reasons. Standard Chartered's analysts identified the master account as the second catalyst that pushes XRP beyond the $5 to $10 range the Clarity Act passage alone would produce. Their documented analysis is that the passage scenario produces $5 to $10, and that anything above that requires the master account application coming through and letting banks settle in XRP directly on Federal Reserve rails. The sequence runs Clarity Act first, master account second. The first catalyst is arriving next week. The second catalyst is in the application queue. Now, let me walk through Garlinghouse's bond settlement statement, because this is the most commercially significant thing he said this week, and it is the statement that most directly advances the price thesis. Garlinghouse appeared on the Crypto in America podcast with Eleanor Terrett and said the current bond settlement system is slow, arcane, and broken. He said it is only a matter of time before all bond settlement moves on chain, and that the XRP ledger is built for exactly that. The RWA data from May 2026 published this week confirms what he is describing. The total value of real-world assets on the XRP ledger surpassed $3 billion in May 2026, according to RWA XYZ data. The value grew 78% in the last 30 days alone, driven by the migration of fixed income products toward digital networks that allow fractional ownership and more agile settlement. That 78% monthly growth rate is not a press release claim. It is documented on-chain data from a tracked source. The bond settlement market that Garlinghouse is describing is massive. The global bond market has approximately 130 trillion ons outstanding debt. Settlement currently takes 2 days under the T+2 standard. Some markets still settle T+3. Garlinghouse's argument is that the XRP ledger's 3 to 5 second finality is the specific technical characteristic that makes the XRP ledger the natural bond settlement infrastructure once the regulatory and institutional infrastructure for on-chain bond settlement is in place. Last week's JP Morgan Mastercard Ondo tokenized treasury settlement on the XRP ledger in under 5 seconds is the documented proof of concept. His 30% on-chain statement is the most specific quantitative signal he has given about Ripple's own commercial trajectory. He said 30% of Ripple Treasury's $13 trillion payment volume could be on-chain by 2031. 30% of $13 trillion is $3.9 trillion. When $3.9 trillion in annual payment volume processes through the XRP ledger annually, the transactional demand for XRP as the bridge asset and the fee token is categorically different from the current daily DEX volume of $4 to $8 million. The 5-year on-chain migration trajectory that Garlinghouse described is the specific commercial pathway from the current price to the institutional adoption pricing levels that analysts have been modeling. He also made a statement on the podcast that the community has been circulating widely. When pressed on whether XRP holders specifically benefit from a potential Ripple IPO, Garlinghouse said he wants to do something special for XRP holders. He called the IPO not a priority and pointed to the difficult public market environment for crypto companies. But the statement about something special for XRP holders is the specific signal that the community has been discussing since it was published hours ago. Now, let me connect the decisive week statement because this is where the Fed story and the legislative story converge. At Consensus Miami 2026, Garlinghouse said the weeks of May 11th and May 18th could be decisive for advancing federal cryptocurrency legislation. He warned that if momentum stalls in the Senate Banking Committee, the probability of passing a comprehensive crypto bill could decline sharply, and regulatory progress may be delayed further as political attention shifts toward the upcoming election cycle. That statement from the CEO of Ripple, speaking at the largest crypto conference of the year, is the most direct and specific assessment of the legislative urgency that Garlinghouse has ever stated publicly. Not 80 to 90% confidence in a specific month, a specific warning about what happens if the momentum stalls in the specific 2-week window he named. The markup is confirmed for next week. The July 4th signing target is stated. The banking lobby escalated today, with 5 trade groups calling the stablecoin yield language insufficient. The senators are holding firm, and Garlinghouse has now named May 11th and May 18th as the decisive weeks from the consensus stage. The CEO, the senators, and the market are all pointing at the same 2-week window. Now let me walk through the complete supply and institutional picture, because the Fed developments and Garlinghouse's statements hit a supply structure that has never been more constrained. Exchange reserves are at 7-year lows of approximately 1.7 billion XRP. Total ETF net inflows have reached $1.29 billion. Whale wallets added 1.2 billion XRP in Q1 2026, the highest quarterly total since 2023. The real-world assets on the XRP ledger surpassed $3 billion in May 2026. RLUSD has crossed 1.5 billion in market cap. Evernote holds 473 million XRP, advancing toward its Nasdaq listing. And the DTCC announced this week that it will begin limited trading of tokenized securities in July 2026, with BlackRock, JP Morgan, Goldman Sachs, Nasdaq, and Ondo as participants, with Ondo being the specific institution that completed last week's cross-border treasury settlement on the XRP ledger. The institutional infrastructure being assembled around the XRP ledger is the most concentrated and most credentialed that has ever existed in this ecosystem. The Federal Reserve Master Account is the specific piece that converts that institutional infrastructure from a compliant private network to a supervised Federal Reserve system participant. Kraken demonstrated this week that the Fed is willing to grant that access to crypto companies. Ripple is next in line. Let me give you the investment calculator, because the Garlinghouse statements, the Federal Reserve Master Account story, and the Clarity Act's confirmed markup need to be expressed in concrete portfolio terms. At $1.40, $1,000 buys you approximately 714 XRP. At Standard Chartered's documented flow scenario of 2.80, those 714 tokens are worth 1,990 nats. At $5, the lower bound of the analyst consensus for the Clarity Act passage scenario, they are worth $3,570. At Standard Chartered's documented $8 2026 passage target, they are worth 5,712. At $10, the scenario where the Clarity Act passage and the worst Fed skinny master account framework at simultaneously and the institutional adoption begins scaling through the Ripple National Trust Bank infrastructure, they are worth $7,140. At Standard Chartered's $28.20 service extension, incorporating the Federal Reserve Master Account as the documented second catalyst, they are worth $19,192. At $80, the long-term scenario that Garlinghouse's 30% on-chain trajectory implies for XRP's utility pricing as $3.9 trillion of annual payment volume processes. Through the XRP ledger, they are worth $57,120. At $5,000 invested, multiply every number by 5. At $10,000, multiply by 10. At $25,000, multiply by 25. The documented near-term downside to the on-chain support level at approximately 1.27 is approximately 9%. Standard Chartered's stall scenario produces 99% upside. The passage scenario produces 408% at $8. The master account second catalyst produces over 300% at $28. The 30% on-chain trajectory produces over 5,000% at $80. 9% downside against 99 to 5,000% upside across the documented institutional research and Garlinghouse's own commercial trajectory statements. Now let me lay out the specific observable sequence, because the Fed story and the Clarity Act convergence produce specific observable events in the next 2 weeks. May 11th is the Senate return and the opening of Garlinghouse's documented decisive window. The banking lobby's edits will arrive before then. The Senate's response in the first 48 hours determines whether the markup proceeds without delay. Tim Scott's markup scheduling announcement is the primary observable. If it lands in the first 2 days of the Senate's return, the bill is moving and the July 4th timeline is on track. The Wash Fed's first skinny master account communication is the second observable. Governor Waller announced the skinny framework and is seeking to finalize it by year end, The first communication from the Wash Fed about the skinny account framework timeline and eligibility criteria will tell you more about Ripple's master account approval trajectory than any other single signal. Watch for any Fed-published guidance on fintech and blockchain. Company access to the skinny master account framework. The RWA on-chain volume weekly is the third observable. The 78% monthly growth rate in real-world assets on the XRP ledger, documented this week, is the on-chain confirmation of Garlinghouse's bond settlement thesis. Watch the RWA XYZ data for the XRP ledger weekly. When the total RWA volume approaches $10 billion, Garlinghouse's 3 to 4 year on-chain migration timeline is materializing ahead of schedule. Something special for XRP holders is the fourth observable. Garlinghouse said on the Crypto in America podcast today that he wants to do something special for XRP holders in connection with a potential Ripple IPO. He called the IPO not a priority, but did not rule it out. If Ripple's IPO discussions advance, the specific benefit for XRP holders that Garlinghouse alluded to is the commercial catalyst that would add retail demand to the institutional demand that Clarity Act passage is building toward. Garlinghouse said the bond settlement system is slow, arcane, and broken, and that the XRP ledger is built for exactly what comes next. Kraken demonstrated the Fed is willing to plug crypto companies in directly. Ripple is next in line. The markup is confirmed for next week. Garlinghouse called it the decisive 2-week window from the consensus stage. The infrastructure is assembled. The institutional proof of concept is documented from last week's JP Morgan MasterCard on-demand settlement. And the price at $1.40 is where all of it is available before next Monday, Senate return. Macro storms pass. Infrastructure lasts. Smash that like button. Drop your read on the Federal Reserve Master Account timeline in the comments. Does Ripple get skinny master account access by year end under the Wash framework? Or does the Kraken precedent mean a multi-year queue? Let's see what this community's analytical consensus on the Fed timeline looks like. Subscribe and hit the bell. When the Clarity Act markup is confirmed, when the Wash Fed publishes its skinny master account eligibility criteria, and when Ripple's master account application advances to a published status, my breakdown is live within hours. The CEO said it. The Fed moved. The window opens Monday. You were here when the pieces came together. See you on the other side.